Hi, welcome to week 2. This week we are going to continue to learn more about cost and the different methods of costing. Last week we were introduced to the components of cost and their products, and this week we're going to cover additional methods of costing and assigning costs per unit and different cost pools. I did want to follow up on the discussion question from last week and that pertain to the financial statements that should they follow GAAP. And there was a lot of discussion, and I just wanted to bring up a little information about the differences in the statements. And we all covered, I think everybody understands that the financial accounting statements go outside the company, and managerial accounting statements or cost accounting statements, they stay in within the company to department managers, even senior leaders, but they're used within the company to make decisions. And while I think everybody was in agreement that they needed to remain consistent, and so people were utilizing the theory that they should follow GAAP because they needed to follow certain steps, they needed to follow regulations, they needed to follow the rules so that they were consistent, that everybody understood them, that they meant the same thing. But by following, if GAAP were establishing the guidelines for producing these statements, that meant every company had to provide the statements the same way. And different companies report things different ways. In production, if one production company makes a product that has, let's say, 100 parts, that it goes through the product line very quickly, and there's just 2 or 3 people that touch it. So there's very little labor. So their analysis is going to be focused on the components and how do we keep the cost down because of the parts that go into it. And they're not going to look at the labor very much. So most of their reporting is going to be focused on the cost of the raw materials. Then maybe also overhead, because if they have a lot of machines involved, then there's going to be overhead for maintenance and upkeep and buying the machinery, etc. But they're not going to be looking at the overhead, or I'm sorry, the labor. However, if you have another product that, let's say, only has 5 raw material in pieces, but it's very labor intensive, let's say it takes 4 days for 2 people to put this part together, then when that company is looking at how to save money, they're going to focus on labor, not materials. So their cost reporting is going to look completely different. So for GAAP to establish statements, it would be very difficult or practical for companies to have statements that GAAP said, here's the statement that you have to use, and it be meaningful to company A if it was focusing on labor, on the labor details, but if it was focused on material details, it wouldn't be meaningful to company B. But if they created reports that had all of the information, it would be inefficient for the companies because company B doesn't need to focus on the labor. So company B doesn't need to, I think I said it backwards, company A doesn't need to focus on the labor, so it would be a waste of time for the accounting department to have to do those reports. And if GAAP established those, added those rules, then they would have to. So, and this is oversimplified, but this would be just one example of things I've seen in the past of companies do things differently, but getting the same information. The snowboard company, they look at their cost, volume, profit. They have their sales, variable cost, contribution margin, and getting operating profit. For their blue, yellow, and red lines, theirs are just going down horizontally, or they go vertically, but the numbers are horizontal by product line. And I said this is just oversimplifying because it is the same information, but they want to look at them differently. Floataway canoes, they have their product lines going down the line, and then they have the information going across horizontally. So if they want to go down the line and just look at operating profit this way, let's say they used filters and they could look at anything that was under, let's say they were going to look at anything under $40,000, they could filter and say, I want to look at these two product lines. Not to say you can use horizontal filters in Excel, but it's easier than filtering that way. But that's oversimplifying just formatting differences that companies use, even though that's the same material or information. Another instance, I've seen this just in the same company, differences in how managers look at the information. And this is to give you an example of if you have different managers in the same company that don't agree on the information that needs to be reported or don't understand, then you're going to, or they think the same information needs to be reported, but they understand it to be different and have different meanings, then one company to the next is going to see that information having different meanings. For instance, I worked for a company that was responsible for the receivables for pharmacies. And now, in this day and time, most pharmacy or anything healthcare related goes through electronically. The doctor's office or the pharmacy sends the bills to the insurance company, and the insurance company issues electronic payments, and electronic payments go to the bank. And if everything works correctly, then this payments file is also sent to your store, and the store picks up that file, and your payments clear out your receivables. Well, if that doesn't work correctly, then you have a team of people that then they have to go in and rebill, either manually pick up a piece of paper and send it to the insurance company, or they can electronically rebill the insurance company those payments that somehow got stuck in the process and didn't get paid. Well, there was a term called the value add, which was what was reported for that team who did the rebilling. And there was discussion of what was their value add? Was their value add the effort that they made each month? For instance, the team of 18 employees, they actually rebilled 9,687 invoices for $785,000. That's what they rebuild. So is that the value add? Or in January, they collected on 6,000 invoices for $600,000. That money came in off 4 invoices that they rebuilt previously. So is that the value add? That was the result of effort from those people, because they're going to invoice we bill 9,600 invoices, but we know they're not going to collect on all those for whatever reason. They weren't paid the first time, might not be paid the second time because it's uncollectible, or they're only going to get partially paid. So one theory is this is not the true value add, it's what we get paid is the value add. But the other theory is, well, they're adding a value because this would never happen if these 18 people weren't working. We would never rebill $780,000, and therefore you would never collect anything if they didn't make this effort. So in the long run, it was determined that you would report both numbers, and they had different terminology for them. So in a company, you can, if one company has difficulty deciding information that needs reported within itself, then from company to company, it would be very difficult to determine what to report. And since every industry is different and every company's business is different, there's no way that GAAP could get to that detail of level to dictate how reporting should be done. But one caveat to that is, years ago, there was laws passed called Sarbanes-Oxley, and that was due to the Exxon and wow, I just lost all the companies' names, but all the fraud and embezzlement in all the major companies. So they passed Sarbanes-Oxley, and this law put all these restrictions in place for publicly held companies, so that there are a lot of controls in place. First of all, so one person does not have they don't have enough, or they don't have too much decision making. One person can't, for instance, they can't like input an invoice, approve it, write a check, and sign a check, and mail the check. They can't make high-level decisions on their own. There's all these controls that are put in place so that things that happened with, Exxon, for instance, can't happen again in a publicly held company. And these are they call them SOX controls. And now this law was passed, but the law isn't like GAAP. It doesn't say this rule, and this rule. The law just says you have to establish these controls, because they don't know the business. They don't know your business, so they can't put these different controls in place. However, the company has to come in and say, this is how we do business. This is step 1. This is step 2. This is step 3. And then they also outline, this is the control in place. This is the control in place. And then those companies have audits, which external audits come and review your SOX controls, and they test to make sure you're following those controls to guarantee you're doing business like you said you were. And they initially test to make sure what you say is a control is truly control, that you could not, there are not risk factors in place, and opening yourself up for liability, risk. But by doing this SOX documentation, it puts the consistency that many of you mentioned and said was imperative. It puts that in place within the company. Now, it doesn't say this statement, the cost, volume, profit statement in company A is going to be the same in company B, but it says the cost, volume, profit statement is going to be the same month after month after month no matter whether Steve does it, Gary does it, or Ann does it. It is done this way. And unless they change the SOX documentation and it goes through a chain of command, is signed off by different levels of management, and the accounting team and audit firm approved, has signed off on it. Once that's done, then that could be changed. But there is that documentation, and you can't just go in and change those reports and those documents each month just willy-nilly. So I think perhaps those SOX controls would be maybe the security or the guarantee of consistency that many of you would be looking for, that you were thinking GAAP would provide, that GAAP can't, because the SOX controls, the company actually, they write the rules themselves and say, this is how we're going to do it. But it is by individual company. And the reason that would be the best answer for your cost reports is because, as I first said or explained, is Company A's business and even their industry is so different than Company B that for GAAP to say this is how the reporting is going to be, first of all, it would either not apply to every company, it may not provide the information they need, or it is going to provide the information. The reports would have to provide information, too much information, and be wasting too many people's time. So I hope that explanation helps you understand why, my point of view is that we don't need GAAP to come in and regulate the cost accounting reports. It is imperative for the financial reports because those are what the investors use, those are what your stakeholders use. And so yes, they do need to understand the financial position of Company A and be able to measure it and compare it to Company B. And so they need to be talking the same language. Then I was going to try to speak to that a little bit quicker, but I think that took a little bit longer than I planned. So I'll just wrap up with introducing week 2. We're going to continue to learn about cost accounting. And unfortunately, probably speak to cost accounting more than managerial accounting, even though the class is called managerial accounting. The term is interchangeable, basically. Maybe after we get off these chapters that are focusing primarily on how to cost the jobs, how do the cost and profit analysis, it's easier to transition to the managerial side. So this, it is managerial accounting, but right now we're focusing on how to cost the cost accounting processes. This unit, we're going to focus on job order cost, process costing. You're going to learn how to have the predetermined overhead is computed. Excuse me. What activity-based costing is, how it is used, when it's used, and then also what equivalent units are and how they are used in process counting. Or I'm sorry, process costing. And then tomorrow, I'm going to have a live session where we can interact and have a discussion about job order costing and process costing. And that's to have a live discussion to build on our discussion question posts. I'm hoping that this can kind of stir or kind of prod our discussion posts and perhaps make it more engaging by our interactive discussion. We could bounce ideas off each other right then, and then we could think about it and then go back and go back to our discussion posts and have build off the discussion we have tomorrow. I've sent you the link through an email, so hopefully I'll see some of you tomorrow so we can have a discussion. I'll first start out with a little bit of an introduction, explaining the two, and then we can discuss it. You can ask questions, and we'll go from there. I hope you have a good week, and I hope to see some of you tomorrow. Thank you.